Hello again from Core Wealth. We're going to be having a look back at what happened in the month of April in financial markets, and we'll also touch on a bit of the longer term as well. But let's get into what's been happening around the world. So news that came out in April for the first quarter in South Africa has been that our trade surplus has been at record levels. In other words, we are selling more goods to the rest of the world than what we are buying. And most of that has been in the resource sector, also some of the agricultural sector. But that's been good for the country, obviously generating revenue, but also demand for the rand. And that's why one of the reasons why the rand is so strong and getting close to 14 rand to the US dollar. If we look around the world at economic activity, what's happening, our economy is growing. There's been huge stimulus since Corona happened, both monetary, so in other words, putting cash into the economies, as well as fiscal stimulus by way of investing in infrastructure and government projects. And that's been the case around the world, and it's working. We've seen in the US their economy is almost back to the level it was prior to COVID, so they've seen good turnaround in growth following the initial lockdowns last year. We've seen China really growing strongly, and that's had a knock-on effect to an economy like Germany, for example. So the outlook for economic growth around the world, and including in South Africa, is that things are picking up quicker than what most people expected. And that's probably natural in that people get more negative when they're in the midst of something negative and find it difficult to look forward. But we are seeing good economic growth globally. And then lastly, around the vaccines, we've seen rollouts going well in some countries. In South Africa, it is going slower than we would like, but there is progress. And for example, we'll talk a bit about it later, further rollouts to the general population will be happening later this month. So April was generally a good month. Listed property was the standout, up over 11% for the month of April. Global developed world equities were up quite nicely as well. The South African equity market just up just 1% or so. Our bond market was also up again, catching up some of the pullback that it experienced in the month in the month of March. The other point was the rand continued to strengthen against the dollar, stronger by more than 3% in the month of April. But what April has taught us is that if we look back at the returns over the last year, the two standouts are South African equity and South African listed property. Both things that were taking a lot of criticism just over a year ago in the midst of the crisis. Some people predicting that, sort of run for the hills kind of thing. But actually, over the last year, you've had more than 40% return on listed property and well over 30% returns on South African equity. About 20% and more ahead of developed world equities. Now, fortunately, our portfolios are diversified, so we have exposure to all of these asset classes, and this last year really demonstrates the importance of not getting sucked into the hype and keeping your portfolios diversified. The rand over the last year is stronger by more than 20% against the US dollar. Last year, this time, people were talking about it going through 19 and 20 rand to the dollar, and actually a year later we sit at it looking like it's going to strengthen through 14 rand to the dollar. If we look at how the market performance fed through to our portfolios during the month, it was a good month. Pretty much everything up around 1% for the month, and what we have seen is that some of the portfolios that underperformed competitors last year have actually more than made up that. And so things like our retirement growth strategy as well as our flexible strategy are now comfortably ahead of peers over the last 5 years. And we're expecting to see more of that come through when we look at the types of investments that our underlying managers are making. If we look at our international portfolios, even though the rand has strengthened, if we measure them in hard currencies, which is how one measures an international portfolio, doing well against their peer groups and outperforming their peer groups, which we're very happy about. a question that may be in some of your minds is that we've seen such strong growth in our markets over the last year. Can that continue? And one of the reasons we believe it can is because as we look around the world, prospects for economic growth, which ultimately drives profits in companies, continue to look good. The IMF is predicting that economic growth in 2021 will be in excess of 5.5%, and in 2022 and 2023 above average growth is expected in those years as well. We're seeing in the US that the consumer is sitting in a very healthy position. This graph that you'll see now shows how much cash they're sitting on, well above the average levels of cash, simply because they've been given a lot of cash back from the government, and generally in lockdown, people's spending patterns have reduced to some degree as well. And that is call it dry powder for the consumer in future to go and spend that and continue to get economic growth going. The other thing that we're seeing in the US is Biden's $2.2 trillion fiscal stimulus. In other words, they're going to go and build bridges and roads and infrastructure that again stimulates the economy. We are already seeing the effect of this kind of economic growth in share prices because the companies are making profits. So the profits being reported that just started coming out now for the first quarter in the US, and those profits are surprising. In other words, they're coming out higher than what people expected. And we're seeing similar things happening around the world as well. If we have a look at the South African stock market, two areas I just want to have a look at. One, the mining companies. This next graph just shows you the expected cash generation from these different mining companies over the next 5 years. And really healthy numbers, which again, as we've seen resource prices go up, there hasn't been a lot of investment around the world into new mines, so there's not a glut of supply either, and that's been good for these companies, and they are starting to reap the rewards of that. And so we think, and it's starting to be recognized around the world, that global or that resource companies are looking very attractive at the moment. The other one is the banks. The banks during Corona actually provided for losses. They actually reduce their profits in expectation of having to write off loans in future. And what we've seen is that the banks now are really cheaply priced because their profits are going to go up significantly in this coming year because they don't have to provide for those bad debts. And that again makes our banks attractive and should be good for their share prices. Add to that some of the tailwinds that we have. We've spoken about the resources being in demand globally because of all this infrastructure spend that's happening in places like China and the US. The other thing is that we are seeing the government in South Africa continuing to make steps or make advances in terms of sorting out corruption within the ANC and within government. That's improving. If we look at the agricultural sector, again, a sector that really is doing well at the moment, and actually has continued and has done well over the last number of years. Something like our citrus fruit producers, really one of the standout industries from South Africa in terms of exporting things overseas. So in conclusion, the outlook for the equity markets, both in South Africa and emerging markets globally and equities globally, look attractive over the next 3 to 5 years. They may be volatile, but we expect to be rewarded for our investment exposure to those asset classes. Just one thing on the vaccines. In the second half of May, vaccines will start being rolled out to the broader population, those over the age of 60. If you are over 60, please register on the government website, on the health department website. If you need any help with that, although it is relatively easy, but if you need any help, please give us a call or give your advisor a call and we'll talk you through that process. We'll also be able to tell you how your medical aid is going to deal with payment for the vaccine. So thanks for watching, and keep safe and social distance, sanitize and wear your mask, and we look forward to seeing you soon.